Of course, the topic of the day is also trade talks, those that will be taking place between China and the United States in London.
Both countries face pressure to strike a deal, with the trade war sparking widespread concern for global growth.
The U.S. and China are back at the negotiating table this week in London. And while Asia's markets are showing some optimism, Hong Kong just entered bull market territory. Leading economists are urging caution. Don't expect a breakthrough. This is the first formal follow-up since the Geneva deal, which temporarily paused escalating tariffs. So, what's on the table? Why are businesses watching so closely? And what should we realistically expect? Let's break it down. In May 2025, the U.S. and China reached a fragile agreement known as the Geneva Deal, a 90-day truce that eased tariffs after months of escalating trade tensions. The U.S. reduced tariffs on Chinese goods from 145% to 30%, while China cut its tariffs from 125% to 10%. This week's London talks mark the first meeting under a new economic and trade consultation mechanism, created in Geneva. The U.S. delegation includes Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and Trade Representative Jamieson Greer. Lutnick, who oversees U.S. export controls, is expected to play a key role. China's delegation is led by Vice Premier He Lifeng, who will remain in London for the week. President Trump posted that the meeting should go very well. But both sides acknowledge this will be a long process, not a quick deal. First, rare earth minerals. China recently announced it would issue some permits for foreign companies to import rare earths, a temporary move aimed at easing tensions. Second, export controls. Since Geneva, the U.S. has expanded restrictions on advanced semiconductor design software and added new Chinese firms to its entity list. The U.S. is also encouraging allies to reduce Chinese content in supply chains, a move Beijing opposes. Third, fentanyl. The U.S. wants China to tighten controls on fentanyl flows, an issue not addressed in Geneva but now a key discussion point. Finally, sector-specific tariffs. China seeks reductions in tariffs on targeted sectors, while the U.S. is maintaining pressure on critical industries. As economists point out, each issue requires detailed negotiation, and reaching comprehensive sector-specific agreements will take time. So, what should we realistically expect this week? Experts say, lower your expectations. According to a report from Reuters, the talks in London are unlikely to produce a full resolution. The most important outcome would simply be keeping the dialogue open and preventing a breakdown. One key signal to watch. If the talks continue through the full week in London, that would be seen as a positive sign. But the risks remain. If talks fail and tariffs snap back to the previous 145% levels, it would hit both economies hard. The U.S. economy is already showing signs of slowing. May's Purchasing Managers Index indicated a softening in manufacturing activity. Consumer expectations are weakening, according to the University of Michigan's latest survey. Meanwhile, China's own export data show that shipments to the U.S. have declined sharply, even though Geneva deal tariffs were only in place for part of the reporting period. Internally, China is grappling with involution, hyper-competitive pricing in sectors like electric vehicles that is hurting overall economic efficiency. Both sides have strong reasons to avoid another trade war, but a breakthrough this week is unlikely. Analysts suggest that the priority now isn't about striking a big deal. It's about keeping the process moving forward and avoiding new disruptions. In short, London's trade talks are an important step, but don't expect miracles. The stakes are high, but the issues are complex. With the Geneva deal's 90-day clock ticking, all eyes are on whether this fragile truce can hold. We'll keep tracking the developments, so subscribe to the channel for the latest updates. Thanks for watching.
We do have confirmation now from the president that both President Xi and President Trump spoke on the phone today. The call lasted about an hour and a half. President Trump says that there should be now no longer.
I think we're in very good shape with China and the trade deal. We have a deal with China, as you know.
President Trump and Chinese President Xi Jinping just spoke on the phone for 90 minutes. They didn't talk about Ukraine. They didn't mention Iran. The only topic? Trade. And at the center of it all, rare earths. Trump says, "We have a deal, but there's no document, no timeline." So, what exactly did they agree on? And what does it mean for the U.S. economy?
The tweet this morning that came out from the president about his conversation with Chinese President Xi Jinping referred to the intricacies of our recently made and agreed to trade deal.
On June 5, 2025, President Trump and President Xi held a 90-minute phone call. The topic, trade and trade only. According to both sides, there was no discussion about Ukraine, Iran, or any geopolitical tensions. The White House later said the call was productive, and Trump posted on Truth Social that a deal was already in place, just needing clarification on a few points like rare earth magnets. China's official readout, on the other hand, warned the U.S. to remember the negative consequences of taking measures against China. Both leaders invited each other for official state visits, and accepted. It sounds diplomatic. But there's a bigger question here. Is this a real turning point, or just a timeout? Because as of today, there's no signed agreement, no known deadlines, and no public list of concessions.
But we were straightening out some of the points, having to do mostly with rare earth magnets and some other things.
Back in May, the U.S. and China agreed to a temporary trade truce, the Geneva Deal. Key terms: U.S. tariffs dropped from 145% to 30%. China's tariffs fell from 125% to 10%. But the deal only lasts 90 days, and big issues remain unresolved. Rare earth minerals top that list. Trump said there should be no further questions about their importance. China controls over 70% of global rare earth exports, according to the U.S. Geological Survey. These elements are essential for semiconductors, electric vehicles, and defense systems. Recently, China has limited rare earth shipments to the U.S., affecting supply chains and pricing. Meanwhile, Trump's team is investigating Vietnam's $124 billion trade surplus, alleging that $90 billion of it may be Chinese goods rerouted through Vietnam to avoid tariffs. No deal has been reached with Vietnam yet, and tensions are growing over U.S. efforts to tighten regulations on Chinese firms listed on U.S. stock markets. Beijing calls this economic politicization. So yes, there's a deal, but the hard parts haven't been solved.
Take place. President Trump is not shy of lawfare, though. It is something that he has faced throughout the entirety of his political career. So the Trump administration is fully prepared to fight these battles in court.
All of this is playing out while Trump faces political and economic pressure at home. He's pushing hard to pass his One Big Beautiful Bill, a sweeping tax and spending package that includes the largest middle-class tax cut since 2017, no taxes on tips or overtime pay for law enforcement, and $1.6 trillion in savings, according to the White House. But the bill has drawn criticism from none other than Elon Musk, once Trump's closest ally. Musk has since called the bill a disgusting abomination, arguing it adds trillions to the national debt. So now, the trade narrative takes on even more weight. With public fights over taxes, immigration, and spending, Trump needs a win on trade to shift attention, and rare earths could be the headline he's looking for. The administration says China needs the U.S. market, but it also quietly admits that a stable deal is essential for American manufacturers who are facing rising costs, unstable inputs, and uncertainty over supply chains. If the 90-day Geneva window closes without a lasting agreement, tariffs could spike again, dragging down growth projections in both countries. Trump says, "We have a deal." But history shows that with U.S. China trade, it's never that simple. With rare earths in the spotlight, the next 90 days may shape more than tariffs. They could decide the future of tech, manufacturing, and economic stability.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
I kick out?
Chicken out.
Oh, isn't that nice? Chicken out. I've never heard that.
Wall Street has a new acronym, TACO, short for Trump always chickens out. It's not a joke from late-night TV. It's a market term now used to describe President Trump's unpredictable tariff strategy. From 145% duties on China to a 50% threat against Europe. Many of these tariffs start strong, and then quietly soften. But behind the headlines and the memes lies a bigger question. What's the real economic cost of this volatility? And why does the taco trade matter to global business? The term taco first surfaced in financial newsletters in early May 2025 and quickly spread across trading floors and media outlets. It refers to a pattern. President Trump often makes aggressive tariff threats, then pulls back or delays them after markets react. Let's look at a few examples. In April 2025, Trump reimposed a 145% tariff on Chinese goods, citing national security and fentanyl concerns. By mid-May, after intense market backlash and a temporary deal with China, the tariff was scaled back to 30% for 90 days. Then came Europe. Trump warned of a 50% tariff on EU imports starting June 1st. But following a call with European Commission President Ursula von der Leyen, that deadline was extended to July 9th. This cycle of escalation and retreat is what analysts now call taco. According to Bloomberg, the term was coined by Robert Armstrong of the Financial Times and was later picked up by CNBC, MSNBC, and the Wall Street Journal. On top of the policy swings, court decisions have added another layer of instability. In late May, the U.S. Court of International Trade ruled several of Trump's tariffs unconstitutional, especially the 10% blanket rate and the 20% fentanyl-linked duty. However, a federal appeals court quickly put a hold on that ruling, allowing the tariffs to stay in place temporarily. The result? Confusion for businesses. Nick Vyas, a supply chain expert at USC, explained, "All it does is shock the system with uncertainty. Many businesses are struggling to figure out their overseas supply chains. At the Port of Long Beach, canceled shipping routes remain on hold. Officials say they won't resume until there's clarity on how tariffs will be enforced. And that's the problem. Uncertainty is now baked into trade."
The greatest nemesis of a stable and growing economy is uncertainty. And this right now, the American employer or the small business owner or the importer or exporter is trapped between a decision and a White House.
So what does the taco trade mean for markets? When Trump backs down from a tariff, markets often rally, viewing it as a sign of moderation. When he escalates again, stocks drop, exporters panic, and central banks hesitate. According to Capital Economics, the average U.S. tariff rate has fluctuated between 6.5% and 15% over the past year, depending on pending court decisions and executive actions. Investors have learned to trade the tariff noise. But for businesses like Nike, Walmart, and Ford, the impact is very real. Nike, for instance, sources a majority of its products from Vietnam and China, both under heightened tariffs. Even as Trump threatens Apple and Samsung over iPhone production, companies like Nike are quietly adjusting prices or shrinking margins.
And to tell you the truth, Nicole, I'm a little horrified by it because you have to remember, Trump chickening out is a good thing.
When asked about the taco nickname, Trump didn't hold back. "I've never heard that. It's called negotiation," he told reporters. He defended his strategy as part of the art of the deal. Set a high number, then work down to get leverage. Trump insists these moves are working. He points to $14 trillion in new investment commitments, though those numbers are still under review. In his view, just threatening tariffs has pushed countries to the negotiating table. But critics, including market analysts, warn that while this strategy may score short-term wins, it's disrupting long-term planning for global businesses. So, is the taco trade just a clever Wall Street meme or a real economic signal? Either way, the stakes are high. With the July 9th deadline looming on EU tariffs, businesses, consumers, and investors are holding their breath. What comes next? A 50% tariff? Another walkback? Or just more uncertainty? One thing's clear. In today's global economy, the cost of unpredictability may be harder to measure than the tariff itself. Taco might be a Wall Street meme today, but on July 9th, it could shape your wallet. Subscribe to support the channel and stay updated on how Trump's tariffs unfold.